The oil market is exhibiting signs of having reached a new normal, according to the IEA, with the floor for oil prices jumping from $50 to $60 per barrel. But a few factors could poke holes in that price floor, and market watchers should be careful not to become overly optimistic about the trajectory for oil prices, the agency says. In its latest oil market report, the Paris-based energy agency says that a confluence of events have pushed up Brent prices. Lower than expected oil production figures coming out of Mexico, the U.S. and the North Sea have combined with unexpected outages in Iraq, minus 170,000 bpd in October, Algeria, Nigeria, and Venezuela. Those outages, plus the geopolitical turmoil in Iraq, and especially Saudi Arabia, have heightened tension in the oil market. Inventories also continue to decline. OECD commercial stocks fell below the symbolic 3 billion barrel mark in September for the first time in 2 years. That seems to have put a floor beneath Brent crude prices at $60 per barrel, creating a new normal after prices had bounced around in the $50s for months. But the IEA cautions that the floor is not a solid one, and that a fresh look at the fundamentals confirms that the market balance in 2018 does not look as tight as some would like. For one, some of those outages are temporary. North Sea and Mexican production recovered from maintenance, Iraq is scrambling to restore output, and raised exports from its southern fields to compensate for outages in the north, and shut-ins related to Hurricane Harvey in the U.S. have largely been restored. Libya and Nigeria saw their output inch up in October.